All right, everybody. Happy New Year's Eve Eve. I bet you're probably thinking about those resolutions for 2025.
Hmm.
Well, how about we try something a little different this year? How about resolving to get a little more in the know about what's happening out there in the global markets?
Yeah.
We're going to do a deep dive today into some reports from Market Deep Dive summarizing the past week ending December 28th, 2024.
All right.
We'll be taking a look at the US, Europe, Japan, China, and a few other interesting spots around the world.
Sounds good.
Buckle up because we've got some pretty intriguing stuff to unpack, from a dip in U.S. consumer confidence
Uh-oh.
to a record-breaking bond sale in China.
Wow. Yeah, it has been a week of mixed signals, that's for sure.
Yeah.
Some trends, they're pointing towards growth, while others are making analysts a little nervous,
Yeah.
especially given how interconnected these markets are. What happens in one corner of the world can really send ripples across the globe.
Yeah, that's definitely true. Okay, so let's start with the U.S. It was a holiday-shortened week, so trading was a bit quieter. But the stock market still managed to squeeze out some gains.
Mm-hmm.
Tech stocks initially took the lead, but then kind of lost a little steam toward the end there.
Okay.
But here's where things get a little interesting.
Okay.
Consumer confidence took a bit of a nosedive in December.
Yes. The index dropped to 104.7, according to the Conference Board.
Wow.
And they say that this is due to worries about what the economy holds in the short term.
Mm-hmm.
The real eyebrow raiser here is the expectations part of the index, which plummeted to 81.1.
Oh, wow.
Historically, when this number dips below 80, it can set off alarm bells.
Oh, no.
Businesses get hesitant to invest, and consumers think twice before making big purchases. It can kind of become a self-fulfilling prophecy, leading to a real economic slowdown.
So not exactly the holiday cheer we were hoping for.
No, not really.
The reports also mentioned some other less than stellar indicators. Manufacturing, for instance, showing signs of weakness.
Orders for durable goods like appliances and cars and machinery fell for the fourth time in 6 months. It's a sign that companies are holding back on those big investments.
Well, yeah, it makes sense if they're worried about a potential recession, right?
Right.
But hey, at least the jobs report offered a glimmer of good news. Initial jobless claims went down, didn't they?
They did dip slightly.
Okay.
However, continuing claims, which is the number of people still receiving unemployment benefits, actually went up.
Oh.
They're at their highest point since late 2021.
So even though fewer people are initially filing for unemployment, it's taking them longer to find new jobs.
Right.
That sounds like it could be a sign of trouble in the labor market.
It's certainly something to keep an eye on. And let's not forget about those rising Treasury yields. The 10-year note reached 4.641%.
Oh, wow.
This means the cost of borrowing's going up, which can have a domino effect on things like mortgage rates and business loans.
Okay, so the U.S. picture is a bit like a roller coaster. Some ups and downs and a few twists and turns we're watching closely.
I'd say so.
What about Europe? What's happening across the pond?
Well, European stocks actually saw some gains this week. The STIXX 600 index, which tracks a broad range of European companies, rose by almost 1%.
Okay.
But as always, there are areas of concern.
Yeah.
The UK, for example, revised its economic growth estimate for the third quarter, all the way down to 0%.
0% growth. So they're basically just treading water.
Exactly.
Mm-hmm.
And this is causing some anxiety about a potential stall in the UK economy, especially with the new government's plans to raise taxes.
Yikes. And then there's the political drama unfolding in France. President Macron had to reshuffle his entire cabinet.
Yes, this is Macron's fourth cabinet shakeup in a year.
Wow.
He's facing some serious fiscal challenges, and it seems he's still searching for the right team to navigate these choppy waters.
Oh, boy. It sounds like Europe has its own set of economic puzzles to solve.
Definitely.
Let's shift gears and head over to Asia. What's the story there?
Japan had a strong week with the Nikkei 225 index jumping over 4%. Weakening yen is playing a big role as it makes Japanese exports more attractive to buyers in other countries.
Makes sense. A weaker currency makes their products cheaper overseas. It's like an instant discount.
Precisely. The Bank of Japan has been hesitant to raise interest rates,
Okay.
but hinted they might consider hikes if the economy keeps improving.
Okay.
They're walking a tightrope, though, because they also need to keep inflation under control.
Right.
Tokyo's inflation rate just hit 3% year-on-year in December, which is higher than expected.
So Japan's playing a delicate balancing act.
Yeah.
Now what about China? They've been facing quite a bit of economic pressure lately.
Interestingly, China's stock markets also rose this week, buoyed by hopes that the government will roll out more stimulus measures. But the real headline grabber was a report from Reuters about China's plan for a massive sale of special treasury bonds next year.
We're talking record-breaking, right? How much are we talking about here?
A staggering RMB 3 trillion.
Wow.
That's a huge leap from their sovereign debt issuance in 2024.
Wow, they're not messing around. What's the thinking behind such a big bond sale?
Well, the report suggests they'll use the funds for a variety of initiatives, including boosting consumer spending through subsidies, upgrading equipment, and investing in innovative sectors.
Sounds like they're pulling out all the stops to jumpstart their economy, but are these efforts actually making a difference on the ground?
Well, the data on industrial profits still shows a decline,
Yeah.
although the pace of that decline is slowing.
Okay.
So the stimulus might be starting to have some effect, but it's still too early to say for sure.
Lots to unpack there. It seems like every region has its own unique mix of economic challenges and opportunities.
That's the nature of a globalized economy.
Right.
What happens in one region inevitably has ripple effects on others. That's why staying informed is so crucial. It's like having a roadmap in a constantly changing landscape.
Yeah, I completely agree with that.
So we've covered a lot of ground with US, Europe, and Asia,
Yeah.
but there are a few other key markets making headlines that I think are worth exploring. Some of these stories have been pretty dramatic. Would you say?
Absolutely. South Korea, for instance, seems to be facing some major headwinds, both politically and economically. Their stock market is taking a real beating.
To put it in perspective, South Korea is on pace to have more monthly stock market losses this year than they did during the 1997 Asian financial crisis.
Wow, that's a pretty alarming statistic. What's driving this downturn?
Well, a lot of it stems from political instability. Just this week, their parliament voted to impeach the acting president.
Oh, wow.
This comes on the heels of President Yoon Suk-yeol's impeachment just a couple of weeks ago.
So they've had two presidents removed from office in less than a month. That's incredible.
It's a very fluid situation. The root of the problem seems to be President Yoon's attempt to impose martial law, a move that clearly backfired. This level of uncertainty is definitely shaking investor confidence.
Yeah, I can see why. It makes you wonder what's going to happen next. Let's move on to a brighter spot, shall we? The report mentioned Turkey is on track to be one of the world's top performing markets this year. What's their secret sauce?
It appears their return to more traditional monetary policy is paying dividends. They were grappling with runaway inflation for a while, but their central bank has been aggressively raising interest rates to try and rein it in.
And it seems to be working.
To a certain extent, yes. Their annual inflation rate has come down significantly from its peak back in 2022. In fact, just this week, their central bank felt confident enough to cut interest rates for the first time since early 2023.
That's a positive sign, right? It suggests they believe they've got inflation under control.
That seems to be the prevailing interpretation. Of course, it's still early days, and there are always risks involved. But Turkey's performance this year has been quite remarkable.
Yeah, it's a good reminder that even in a global economy that often feels like a roller coaster, there are always opportunities to be found.
Indeed. And speaking of the bigger picture, it's important to connect these global market movements to what they might mean for you, the listener.
You mean how these trends could play out in our everyday lives?
Exactly. We've presented a lot of data and analysis today, but the real value comes from understanding how these global trends might impact your own personal decisions. Maybe you're considering a major purchase like a house or a new car, or perhaps you're thinking about investing in a particular sector.
Or maybe you're just trying to plan for your financial future in general.
Precisely. The key takeaway here is that these global market trends aren't just abstract numbers on a screen. They have tangible implications for everyone.
So if we zoom out and look at the big picture, what are some of the key takeaways from this week's market wrap-up?
I think the overall theme is one of cautious optimism. There are definitely some warning signs flashing, like the dip in U.S. consumer confidence and the ongoing uncertainty in Europe.
And let's not forget the political turmoil in South Korea.
Right. But there are also some positive developments, such as Japan's economic recovery and Turkey's success in taming inflation.
And we can't overlook China's ambitious stimulus efforts, even if the full effects aren't evident yet.
Yes, exactly. It's a week of contrasting trends. And that's why it's so important to stay informed and keep your finger on the pulse of the global economy. It's about making informed decisions for yourself and your loved ones.
Couldn't have said it better myself. So, as we wrap up our deep dive into the global markets for this final week of 2024, feeling a bit like we've just run an economic marathon. There's a lot to absorb.
It has been a whirlwind tour, for sure, with plenty of data points and trends to consider. But as we always say, knowledge is power.
Yeah.
The more you understand about these forces at play in the global economy, the better equipped you'll be to navigate the challenges and capitalize on the opportunities that come your way.
One thing that really struck me this week is just how interconnected everything truly is.
Hmm.
We saw how political instability in South Korea can make investors around the world nervous, how China's efforts to stimulate its economy can impact the prices of commodities everywhere, and how a weakening yen can give a boost to Japanese exports. It's like a giant chain reaction, isn't it?
Precisely. It's a powerful reminder to think beyond our own borders. What might seem like a distant event in Europe could have a ripple effect on your job, your investments, even the cost of groceries at your local store.
It's amazing. So, as we stand on the cusp of 2025, what are some of the big questions we should be asking ourselves? What are the major trends to watch?
Well, inflation is definitely still a key factor to monitor.
Yeah.
It's cooled down a bit in many parts of the world, but it's far from being tamed.
Right.
The big question is, will central banks continue to raise interest rates aggressively, or will they shift to a more cautious approach to try and encourage economic growth?
Yeah, because the Federal Reserve in the US, for example, has been raising rates to combat inflation. But that can also slow down the economy. It's a delicate balancing act.
Exactly.
And speaking of the US, will they manage to avoid a recession? That dip in consumer confidence we talked about earlier has some folks worried.
Yeah, these are the million-dollar questions. And unfortunately, we don't have a crystal ball to predict the future. But that's where staying informed becomes so important. By following the data, paying attention to different perspectives, and asking those critical questions, we can better understand the possibilities and make more informed decisions.
I think that's what this deep dive is all about, empowering you, the listener, with knowledge and insights. So as we raise a toast to the new year, let's also toast to the value of staying informed and engaged with the world around us.
Sure.
Cheers to that, and Happy New Year to all our listeners. We'll be back next week with another deep dive into the global markets. Until then, stay curious and stay informed.